The advertising world feels very different than it used to be what it did 5 years ago. Growth is harder, clients are more cautious, AI is changing how work gets made, networks are restructuring, and the pressure on the marketers are they've never been higher. At the same time, some of these decisions, some of the biggest decisions shaping this industry, are connected to choices that were made years ago around acquisitions, scale, how agency brands are built. At the center of many of these shifts is someone who has shaped this industry for decades and isn't afraid to call it as it is. Hello and welcome. This is Lalit Kumar, and you're watching Best Media Info. Today we have with us Sir Martin Sorrell.
Good to be with you, Lalit, or Kumar?
Kumar.
Kumar Lalit.
Sir has built a global advertising giant, exited it, and is now building again. In this
We
conversation,
built two, actually. People forget we built Sarches. I was CFO. You may remember of Sarches. They call me a bean counter. I'm not. I do
okay.
like counting beans. The more beans I count, Jeremy Bullmore said that. The more beans I count, the happier I am. But I'm not an accountant, as people label me occasionally, but or more than occasionally. So no, Sarches, then WPP, and now S4. So
Awesome.
people forget Sarches.
I actually was very surprised to know that WPP was at first a plastic
Yeah,
wires
it stands
company.
for wire and plastic products. It
Yeah.
is sort of ironic
It,
that they're now rebranding the whole company. I'm laughing around WPP, and when people say, "What does WPP stand for?" which is a really important question,
yes, it
it stands
is.
for wire and plastic products. We used to make wire shopping baskets and animal cages, and wire and plastic products. We couldn't make trolleys. People used to say we make shopping. We couldn't figure out how to put one basket on top of another to make a trolley.
Okay. Wow. And now you have made some of the best campaigns, some of the best brands that we see today.
Yeah,
That's
we did.
amazing.
Yeah, but we put together. I mean, you were right in your intro. We started with a £1 million wire basket manufacturer because I couldn't afford to take control or effective control of anything else, given the funds I had. And then we built it to at its peak. It got up to about 23, $24 billion. And when I left, it was what, 16 billion quid. So now it's in a bit of a sorry state at under 3 billion, which is really sad. Very sad about that. But who knows what's going to happen?
I mean, over the last few years, we have seen some weird uncertainties in the world, right? Be it geopolitical tension,
Yeah,
we have the AI disruption, and holding companies are consolidating, right? From where you sit today,
they're not consolidating. They're really moving from being holding companies to operating companies. I mean, it's effectively what's happening is the holding company structure, which was not my construction. Often people say I came up with the idea, which is rubbish. It was actually IPG,
hmm,
Interpublic, which is no longer. It's now part of Omnicom.
Omnicom.
There's a guy called Marion Harper there who, in the 1950s, used to swan around in a Boeing jet. Used to land at London, stay in his private jet. This is in the days before private jets were common,
Yeah.
and he had his own plane, and he would land at the Dorchester in London, and come there. So New York and London were sort of the two capitals, and he basically created the advertising holding model. He had McCann's, and then he bought Lintas, which was Lever International Advertising Services, from Unilever because it was part of Unilever.
Yeah.
Just like Kantar Research International, which is part of Kantar, was bought from Unilever by J. Walter Thompson. He had bought Lever's International Advertising. It was an in-house agency. I mean, it's amazing how these things
Yeah.
come around in circles. Lever had its own international advertising services company, and it was bought by IPG. But what he believed was you had to have separate brands to handle conflict. And
Hmm.
when I was at WPP, I mean, JWT and Ogilvy always seemed to me as a natural bedfellows. You could merge them because they both had Ford and Unilever as major clients. So we had Ford and Unilever in JWT and Ogilvy. We had Young and Rubicon with Colgate, and then we had Gray with Procter. So it was amazing.
Hmm.
By the early part of this century, this millennium, we had ended up having those major package goods companies
Right.
in the same organization, which people said it couldn't be done. Um, and when we acquired Grey, I actually did go to both Unilever and Procter to ask for permission, whether they're going to back the idea of us having it in the same vertical. So, as long as we operated separately, that was okay. Now, the industry has changed. In those days, we used to get a full 15% or 17.65% on cost in terms of fees. So we had more wiggle room from a financial point of view to
Right.
set up different channels. Today, that is not the case. Agency fees have been squeezed down to 10%. And obviously, with AI, we have to move to a different model, an output based model rather than an outcome based model, rather than fees based on time and materials. But so the business has changed. But it's a really interesting question I've always had. Why is it that McKinsey could get away having Procter and Unilever in the same firm, or Goldman Sachs
Hmm.
could do M&A advice? I mean, sometimes they have temporal exclusivities, meaning if they're working on Procter, they can't work for Unilever for a
Right.
period of time. But generally, the investment banking and consulting business, you've got, maybe it's they were more discreet, and
Is
maybe
it?
that, I don't know. I don't know what the
I
reason is,
when you
because
say
there's nothing to me. People will say what we do is strategically important. And then I think about what Goldman do
hmm.
and what McKinsey do, and what could be more important than consulting or major M&A. I mean, that's pretty strategic.
Right.
So anyway, it
But
is what it
when you
is.
say holding companies and they are not holding companies, they're
Uh, uh,
operating companies.
yeah, yeah.
What do you mean operating
I
companies?
mean, you don't have a holding company to whom the operating companies report.
Right.
You have a holding company which becomes the operating. So it's one publicist,
Okay.
and I mean, they, you walk into a lobby of publicists. It isn't one publicist. I mean,
Right.
it's 25 different brands, so it's a little bit of a con in a way,
Hmm.
but it essentially, conceptually, what they're moving to is one operating company, which I think is the right way to go. Omnicom, when I was in Mumbai just now, I was staying at the Grand Hyatt Hotel. Opposite is the old DDB headquarters. Now
Hmm.
it says Omnicom on it.
Right.
So they're becoming an operating company. The same thing is true. We're waiting to hear what McKinsey has opined for WPP. I mean, you didn't need to hire McKinsey at great cost to tell you to become one WPP, which is what they're doing.
Right.
You could have done that on the back of an envelope, I think.
But
But they're becoming one WPP. Havas has always moved to that. Dentsu, one Dentsu, although it isn't one Dentsu,
right.
as we know. But essentially, what they're doing is they're consolidating, having grown violently by all of those businesses by acquisition. They're consolidating into one unit where clients can access
Hmm.
everything. Now, the interesting point about that is I think publicists have got it right, and I think monks have got it right too, because we put the matrix is geography first,
Hmm.
then client, then capability.
Hmm.
What Omnicom and WPP appear to be doing, Omnicom definitely and WPP appears to, is to put capability first, which I think is a terrible mistake, then client, then geography, or maybe geography, then client. The reason it's a mistake is if you organize by capability, you set up immediately internal friction. And what you're looking for is for everybody to work together seamlessly. And when you do it, and it's difficult because even with the matrix, you have geographical separations, so people can squabble geographically.
Right.
But if you do it by discipline, it's much more difficult to control. And I think, as I say, Pubba's got it right. We at Monks pursue the same. We're geography first, so by country, by city, then by client, and then by capability. So it's a really interesting thing. We'll see how it works
And this
out.
is you say this is the ideal sequence to go about it?
Yes, I do. Because I think the other ways around, you just create too much internal division. The other thing about AI, one of the things that people don't talk enough about AI, maybe we'll get into it in the course of this interview, is that there are 5 things that affect us through AI: visualization, copywriting, personalization at scale, media planning and buying, general efficiency, and the fifth one is what I call democratization of knowledge, breaking down the silos
Hmm.
by making information available to everybody in the company. It is no accident that Jensen Huang at NVIDIA has somewhere between 40 and 60 direct reports. He doesn't do one-to-one meetings. And AI enables you to enfranchise everybody who has access to have access to all the information. And people build silos and verticals inside companies by controlling information. You control
Hmm.
the information, you control the
Right.
silo, you
Right.
control it. So it brings me to my favorite point, which is the best people in our industry are people who get involved, get interviewed by best media, and get their physiognomy on film or in the press, but who share.
Hmm.
I mean, share the ability of human beings to share, in a teamwork, democratic way is huge. And AI is a huge enabler. I mean, I don't think people fully understand. We had an interesting example of it yesterday in Mumbai. We had a meeting with one of our clients, and he said, they had run a test inside the company, one of their senior vice presidents or whatever, and they'd got a project,
Hmm.
and one team were human beings working together to get the best result, and the other were using LLMs that they had created for this product that
Right.
they were looking at, and with all the history, rich history of this brand in this package goods company. And the LLM team did much far better than
Of
the human team.
course.
So using the technology, and we saw it with the internet, you got exposure, people got access. The marginal cost of information is zero
Hmm.
in these with these systems, and with LLMs you get access. I mean, when I think about the amount of prep that you did for client meetings, when you looked at a company, you got somebody to do a bit of research for a few days, write up a report, then you had to read it, etc. I mean, the access, you can do it almost instantaneously, and the quality of the answer depends obviously on the quality of the prompt,
Right.
the question, but it's amazing what can be done,
But
and
I
we're in the foothills as well.
I'm very I mean, you spoke about how, processes are getting simplified. Of
Yeah.
course, it's technology, it's restructuring and everything. You built WPP through some
Yes,
acquisitions,
because when you
aggressive
start with a
takeovers,
wire basket manufacturer,
right?
and you want to build something, you have to
And
do it.
you created a portfolio that had very strong standalone brands,
Yes.
right? Today, many of those brands are being, as you said, slammed together,
Yeah.
and they're getting simplified in
you got
structure.
to you got to pick the strong ones there. I've come across two clients here who misnamed. They're both WPP clients
Right.
who misnamed the agency that was working for them. No, WPP have made catastrophic errors, in my view, in their brand alignment and their brand choice. And I go as far as to say it was lazy management. I think it was people sitting in Sea Container House in London saying just simplistically they have to be to simplify the business. Well,
Hmm.
by the way, we're paid.
But this is the trend, right? I
We're
mean,
yeah, but
simplification is a trend.
we're paid to manage complexity. I mean, if it was easy, a monkey could do it. Okay,
Right.
all right, or my dog could do it, and it's just this whole simplification thing. By nature, the nature of our business is complex.
Hmm.
Clients are complex, people are complex. What we do is complex. Actually, is driven increasingly by geographical complexity and by technology complexity. So saying we're going to simplify is a nonsense, right? What you have to do is obviously develop the offer in a way that digital, data driven, etc., and appeals to clients and they can integrate. But sitting in Sea Container House and issuing press releases and hoping that these things. I mean, two good examples here in India in the last 24 hours where the clients didn't even know the name of the agency that was working with them,
Hmm.
right? They referred to Wonderman, which is long gone,
Right.
or VML Wonderman. I mean, nobody knows who VML is. Taylor
Hmm.
Swift knows it because it happens to be in Kansas City.
Hmm.
So Kelsey knows it. Travis Kelsey knows it. She knows it, but nobody else knows it. So, and they've plundered wonderful brands like Thompson, like Wonderman, like Y&R, like Grey, which meaning now choosing between them is a difficult one. I agree with that, but following, because digital is important, then choosing that the digital name should go on top of it is a nonsense, right? And clients look at it and say, what the hell are they doing? Don't they understand the value of brands? I mean, clients understand the value of brands.
Right.
They understand that the strength of reputation and history and development and knowledge. And throwing that away, you're throwing the baby out with the
So
bathwater.
don't you think that?
So you have to be very, very careful, I think, in the way you do it. It's easy to criticize, I know, but you have to be very. Publicist is a really interesting thing. They took Publicis together with Burnett and they called it Leo, and that's quite actually interesting what they did, because the emblem of Publicis is the lion, and Leo is the first name of Leo Burnett. So it's actually, to me, that's a much cleverer and thoughtful way than saying, we're going to get rid of Thomson. I mean, here in India, Thomson was the agency. And now we have a situation where they're going to call it WPP Creative, which stands for Warren Plastic Products, by the way. And you've got VML. Nobody knows who that is or didn't know. You've got AKQA, again, a digital brand, good brand, built by Ajaz Ahmed, who's now gone, but built by him, but Grey stronger. And, Ogilvy. I mean, the strongest creative brand probably of those three is Ogilvy. And somebody actually made the comment, you might rename the whole thing Ogilvy, and that would probably cause chaos. But it's not such a bad idea because it's a stronger brand.
But don't you think that we have come full circle, right? So imagine WPP during 1980s or
Yes.
1990s, right? It's one company, but now that one company is acquiring a lot of sub
No, but it's
brands.
different. It's different because in those days, it's what I said. It's the Marion Harper thing. We built those businesses. We didn't fuse them together.
Right.
For two reasons. Well, there were two conflicts. One was conflict of clients, and the other was conflict of people. The conflict of clients is, still have problems with Pepsi and Coke, let's say. But by and large, because the fee pressure has been so high, we've gone from 15% basically to 10, or lower. Clients are not as choosy. There's an economic bargain. We'll reduce the fees and we'll be less picky. Procurement's had a bigger role in it. So, and then the other conflict was conflict of people. That still exists. I was told that last week in New York, when WPP were discussing, and when Cindy Rose was trying to acclimatize everybody to this consolidation of WPP Creative, the heads of the three agencies of VML, AKQA, KKQA, and Ogilvy are looking at one another, because if you're going to go to one brand, it means that two CEO jobs are going to go, right? So the conflict of people is the real issue. How do you get people to work together, right? As a team.
This is what I'm not able to understand.
Yeah.
One umbrella called WPP, and it has multiple brands.
Yeah.
Now, the full circle part that I was talking about is that now that same umbrella is just trying to consolidate it. I just wanted to understand from you that you did mergers and acquisitions at your end when you were running the company. Do you feel that you let the genie out and that genie is now dancing all over the place?
No, it's different. It's different horses for different courses. The world has changed, and what clients want. I mean, in a way, if you think back on time, there was a public company called JWT. There was a public company called Ogilvy. We were a public company, WPP. We consolidated it. We didn't pull it all together.
It was an acquisition rather than a merger, right?
They were all acquisitions. Mergers don't work,
Yeah.
by the way.
Yeah.
Merger. Publicis Omnicom didn't work because Maurice Levy and John Wren couldn't work out who was going to be chairman, who was going to be CEO, who was going to be CFO. That was the basic. It was the social issues that killed that.
Right.
Case of IPG and Omnicom, Philippe Krukowski surrendered. He gave up. He gave up to the extent that he got $50 million golden parachute along with two other people who were negotiating the deal. Everybody else had to fend for themselves.
Right.
And by the way, that's gone from 127,500 people to 104,000 in a year before the deal was done. People, with all due respect, the press and everybody else never focus on that. So no, look, I just think the reason that you're finding it difficult to understand it is that conditions have changed. They've matured. When those businesses were put together, clients wouldn't stand. Now Ogilvy looks after Gray, and Ogilvy was a Unilever agency. Gray was a P&G. There is no way that P&G would accept people at Ogilvy who were working on Unilever being in charge of a P&G agency. Now, maybe all the business from P&G has gone from Gray, and therefore it doesn't matter anymore. But the vehemence around conflict, the problems around conflict have now largely gone. And in that structure, and because of the compression that we're seeing in the traditional TV markets, you have to understand that all the brands we're talking about, whether it be even Publicis, Dentsu, WPP, Omnicom, are all rooted in the 300 billion that's shrinking of the 1.2 trillion ad market, not in the 900 billion that's growing, which is the digital piece. So their biggest problem is not what you're talking about. Their biggest problem is their positioning. Why are the stock market valuations so lousy, to put it crudely? Publicis dropped by 9% the day before yesterday. Why? The AI threat. People can't figure out whether AI is going to help the industry or hinder the industry. And at the moment, they're betting that it's going to hinder the industry. It's the challenges that are affecting a lot of industries. For this morning, the logistics industry took a hit because somebody came out with AI software or code that could disintermediate the traditional logistics industry. A week or so ago, Anthropic came out with software or code that would attack the legal industry, and the companies that have developed, like Relics, that have developed
accountants too.
That developed software around that took it in the eye. So people are trying to figure out whether Publicis has done amazing performance on new business, and yet and delivered 500 basis points of growth in Q4, whereas WPP is expected to show minus 800 in Q4 when it reports on 26, or maybe minus 500. So at minus 5, it's 1,000 basis point difference, which is huge. And yet Publicis stock has fallen by a third over the last year. So the market is really worried about, or cannot figure out, what the impact is. So in that environment, consolidating the company becomes even more important.
It does.
Yeah.
But let's talk about pricing, right?
Yeah.
You've advocated for an output-based
pricing,
model where agencies are compensated on measurable results. Is that so?
Yes.
Right?
Yeah.
But Monks has, on record, talked about subscription-based models.
Well, it can be subscription-based. It can be output-based.
So which of these
both is the answer. No, I wouldn't pick one or the other, but both. So if you have software systems or code or whatever, which people are willing to buy on a subscription basis, that's even better. But what I'm saying is you have to go to an output basis. If we're producing assets, millions of assets, which we are, and we can do multi-millions of assets, we can do them in shorter periods of time. I mean, the best way of describing it is this. I was interviewed by Atifa Silk, the editor of Campaign in Singapore, a couple of years ago. And I came off the interview and somebody came up to me who was working at WPP and said to me, "What do I do?" He said, "I have 18 people," he was in Singapore, reporting to me. And they work diligently from Monday to Friday at the moment. But with AI or with technology, I'll be able to do that on Thursday morning at 10 o'clock by flipping a switch. But why should I do that? I'm paid by clients on the number of hours that I work.
Right.
And the more hours I work, the better it is. And I'm paid internally. I get a higher salary the more people I manage. So I'm paid to manage more people. The model is wrong. right?
Hmm.
In an AI world, with visualization and copywriting, it's going to take us less time and it'll be less cost to produce ads. With personalization at scale, we could do multi-million permutations of ads. The stuff we're doing for GM and BMW, the configurators that we're building, are incredible in terms of the amount of assets that we can spit out. With media planning and buying, we can do it far quicker and more simplistically with algorithmic, working with the six big platforms, the three Western, the three Eastern, do that. General efficiency and what I said, democratization of knowledge simplifies everything we're doing. So it makes it less complicated, less time consuming, more efficient. We have to switch the model. The problem that we have is our models are time and materials based, and that has to change.
But these are two different philosophies. I mean, subscription
No, no,
ensures
no, no, no,
predictability, right?
no, no. It is about altering the model. It's not about whether subscription is better because it's recurring impact or outcome based.
Yeah,
The point is fee based on time doesn't work.
right,
In an AI world, we're compressing the time. We're doing things in nanoseconds.
right.
Just take this. You're recording this on an iPhone. We're sitting here. And we have got four people in the room, including myself, three of you.
Yeah,
But we used to have film crews of 10 or 12 people.
right.
I remember I was in Singapore. I was in my hotel getting up one morning at 8 o'clock and they were doing a film and they were still using about a dozen people
Hmm.
with a model. It was a fashion. I looked at it and I thought it was absolutely insane.
I mean, I do believe that pricing model needs to change. But when you talk about such consolidations, right, there are marketers who are just kind of anxious. And what do you think about
Do you mean
today's,
clients or do you mean
yes,
agencies?
clients? What
Anxious about what?
what do you, I mean, this is something that I have received as an input from an agency head, that marketers themselves are very, on their heels on what to do, what where to,
Well, they're not on their heels what to do. They know.
right.
I mean, it makes no sense whatsoever. Obviously, you can quote me on this
Okay.
to spend vast sums of money anymore on big shoots, and yet
Okay.
people still do it. Makes no sense.
Hmm.
You can recreate. I mean, you may have a legal department that says that we don't like using synthetic human beings inside ads. I get that, but
Right.
over time that's going to go. There are legal departments that are worried about IP. But for example, we've invested in Runway, and Runway will insure you if there's a copyright or IP infringement. They'll insure you against any problem. Um, no, the problem is not about the technology. The problem is about human beings and change management. I mean, it's that's the key issue. It's technology. Everybody accepts.
Hmm.
It's implement. It's change management, and the best story is the story which I mentioned several times. There was a guy called Hubert Joly. He still exists. Hubert Joly, French guy, was a McKinsey consultant. Was hired as CEO of Best Buy, the retailer in Minneapolis, a U.S. retailer, and he turns up at the office at Minneapolis as CEO, and he spends the first 6 months. And the first 6 months, everybody's telling him it's in the challenge was to move Best Buy from being a bricks and mortar retailer to being a digital retailer.
Hmm.
And everybody's telling him it's about change management. And after 6 months, he realizes it is, and he changes the management. AI is not about technology. Everybody accepts the technology is changing things, turning everything upside down. It's about people. It's about workflow, simplifying the workflow, which is what we do with Monk's Flow. We have a suite of 10 or so products which look at visualization of copywriting, personalization at scale, media planning and buying, research and everything, with real-time research
Hmm.
on all sorts of areas. It's not about the technology. Simplify the workflow. So the briefing process between client and agency, simplify it. Lay it out on a piece of paper and make sure that we have the minimum number of steps necessary to get the job done. Once you've done
Right.
that, you superimpose the technology, but people have to be willing to change. And as I always say, turkeys don't vote for Christmas, and people are worried that they will lose their jobs. And the place the places that we see huge change already are autos and financial services. And in both cases, the reason that there's change is there's an external economic force, Chinese EVs and AVs in the case of autos, and fintech platforms. You see it in India. I had a breakfast this morning. I think we had a dozen people around the table. About 4 or 5 of them were fintech companies that were attacking established, disintermediating established financial services business. So branch banking businesses are under threat from these fintech platforms. You don't have the same regulatory frameworks and problems to deal with. So you need to get change. You need an external driver. And the other problem is clients are doing very well. The US economy, the Indian economy is on fire. The US economy is on fire. The US economy is 5 times bigger than China, than India, and it's growing at the same rate. It's growing at 5%. President Trump said on an interview a couple of days ago it's going to grow at 15%. That might be hyperbole. I wish it would happen, but it is remarkable that a $28 trillion economy, which accounts for about a third of the world's economy, is growing at 5%. So things are good. And I was looking at a graph just now before we started the interview. It was a Goldman graph, which showed the earnings expectations, the EPS for the S&P 500 every year since 2018-19, and it's moving all upwards to the right. And the interesting thing is the analyst forecasts for 26 are rising. The EPS are rising on the back of the 25 results. Q4 S&P earnings were on average up 12%, excluding the hyperscalers, 9%. They haven't all reported yet. Q3, 12%, excluding the hyperscalers, 9%. So put, Alphabet and Amazon and Meta and everybody to one side for a minute. Your ordinary company is growing. The weak dollar helps a little bit, it's true, but basically they're growing by 9 or 10% a year. That is extraordinary. Not just last year, and the forecast for this year is even better. So everybody's doing well.
I have
So the inducement to change is low. When things tighten up, then you'll get it.
Let's talk about S4 Capital. I mean,
Yeah.
the top line growth has been on the softer side,
Yeah,
but the profitability is buoyant.
Well, it's not as where it should be. So we have 3 issues. We have to get the top line going again. Our margins are not where they should be. Liquidity actually has improved quite significantly, and the balance sheet is in a much better position, and our capital allocation can be a little bit more aggressive, particularly on dividends. So I feel a little bit better about it. But our issue, we're in the 900 billion, not the 300 billion is declining. We're in the 900 billion. It's growing. It's growing at 15-20%. Our biggest clients are Google. I'm not allowed to mention one of them. Big telecoms company. One of the most valuable on the planet. I won't say any more than that. We were NDA'd on it. Meta, Amazon, T-Mobile, PIF in Saudi, the sovereign wealth fund, etc. So Procter. So we've got good clients and we're building them, but we have to do better.
Are you focusing on protecting margins, or are you focusing on growth?
On both. The answer, yeah. I mean, you always want both. But the liquidity actually has improved, so it's given us a little bit more wiggle room. And the issue for us is that 900 billion is putting 600 billion into capex around AI. I mean, I was just looking at an article. Google going to spend 185 billion alone. Meta is, I think, 135 billion on capex. So just think about it for a minute. It's 600 billion by the hyperscalers. That's more than 10 billion every week.
Right.
For Meta alone, it's more than 2 billion. For Google, it's almost 4 billion a week. I mean, these are huge sums of money that are being invested on AI-driven data, energy, capacity. So what the tech companies, which is half of our revenue, we do about $1 billion of revenue. About half of our revenues come from tech companies. Instead of spending money on OPEX and marketing, they're spending on CAPEX.
When you talk about digital, right?
Yeah.
And this was a traditional thought that digital first agencies were expected to structurally outperform the traditional models because they have, leaner workings, and they have
Well, they're in the
lower
growth.
lower legacy.
They're in the growth 900, not in the dead 300.
Right. Now, when we talk about being a digital first agency, and I think S4
Digital
is
only, really.
right. What kind of realistic margin ambitions can you have over the medium
I
term?
think the margins should be 20%. I mean, there is no reason why they shouldn't be. But, thereby hangs a problem. To be blunt with you, um, we have four basic principles: digital first or digital only, data driven, which sounds, simple today, but, in 2018 when we started was less obvious. Obviously, with data, with AI, it becomes critically important. We go to market as faster, better, cheaper,
Hmm.
and more because of AI and unitary. Going back to the consolidation thing. On the faster, better, cheaper, and more, when you go in saying, which we do, that we can reduce your create cost by 30%,
Hmm.
that in a way there's an inherent pricing issue there. And I think we've been very aggressive on pricing. So your margins maybe suffer a little bit because of that. But in time, as we get wholesale AI adoption, I think we'll get more pricing flexibility. But no, the answer is there are three things that we're focused on. One is the top line, one is the margins, and then liquidity. Liquidity, I wouldn't. We've done very well in that area. I mean, the market was expecting us to be somewhere between 100 to 140 million of net debt, and as we've signaled just in our trading update, we're well under that.
Hmm. S4 was also in talks with MSQ for a possible merger.
Yeah.
Why did that not come through?
Well, their parent company of MSQ is controlled by Capital One,
Hmm.
which is a private equity firm. They approached us.
Okay.
Unfortunately, for the management of MSQ, they approached us without telling the management of MSQ
Oh, is it?
that they were being approached. So I think Capital One, they're more what I would call an industrial P company. In fact, MSQ is one of their only companies. MSQ has made about 12 acquisitions.
Hmm.
Has not integrated any of them.
Okay.
We had sight of their performance. They've been flat for 5 years, haven't grown at all on a pro forma basis. So, it was interesting at one level because Capital One is an interesting source of funds, but beyond that, no, it really didn't. It didn't fit. And of course, the problem was that they came shopping without without being, let's say, transparent.
I mean, okay, so this is interesting because I think this points to the fact that the acquisition playbook might have changed over time because S4 is also, they have done some strategic acquisitions,
No, we've
right?
done a lot. No, no. Our issue is, when I say we're looking at the top line and think our integration, we've not executed integration as well as we should do.
Okay.
I mean, integration is a big issue. It's difficult. Doing deals is easy. Integrating them is much more difficult.
Right.
So you have to get that right, and that's what we're focused on, is getting it right.
I mean, would you call that integration
Yeah.
is something that the power of one has done, and that's why they are registering growth in such a volatile
You mean Publicis?
Publicis?
No, I think Publicis had better leadership. I think Sadoun and Levy are a good combo. Um, I think they have a better strategy. Their strategy includes, they, they have a better story at least.
Hmm.
Built around Epsilon on data and Sapient
Yeah.
on digital, and they have a better structure. I referred to the matrix; it's country first.
Yeah.
So I think they've got it all right. So I think they've done a good job.
So, looking at
It's
current,
interesting, actually. Publicis is a brand. I mean, the analogy. So Publicis, from a naming point of view, Publicis is the original French agency brand, Blaustin Blanchet's brand. Omnicom is a construct. WPP is an accident because we didn't go into great naming exercise. I mean, it was called Warren Plastic Products, which is the WPP. Um, so you got two manufactured names. Dentsu is the same as Publicis, right? But the trouble is it's Japanese, and in the agency business, it doesn't hold for other industries. Other industries, Japanese built multinational businesses very effectively, but Dentsu and Hakuheido seem to be congenitally unable to develop global businesses. Um, so you've got two manufactured names, you've got one. So the when that person suggested, put Ogilvy on top of it, it's not such a bad idea, right? And with Omnicom, it would have been who's the strongest brand? Probably BBDO, right? You call it BBDO. Everybody becomes part of BBDO. Now, whether the media people would like that or not is another question. Whether the data people would like that or not, but stuff it. That's what you want to call it.
I mean,
Because it comes back to about brands, the power of brands. And, if you did some blind testing, um, it would be interesting to see what people said. What do you think the power of one brand should be? At Publicis, I think people would say, it's French owned. It should be Publicis. I don't know what they would say about WPP. Maybe it should be Ogilvy. But, and at an Omnicom, maybe they would say it would be DDB. I doubt it. I think they probably would say BBDO.
The last time we met, we were in Mumbai, and we spoke around the mergers and acquisitions. At that point of time, Omnicom and IPG were not a reality, but a rumor. At that stage, you said that it would be interesting to see Havas and Dentsu getting together.
Yes.
Right?
Yeah, I'm not sure. I don't know whether Vincent Bolloré, who's he says he's retired, but left his sons Yannick and Cyril to run the business. But I think that's probably a little bit of exaggeration. I don't think Vincent will ever retire. He is focused, I think, on the French election. He's very politically engaged, particularly with Le Pen, apparently. So maybe, but Bolloré Investissement, which is the holding company for the family, is a 15 billion euro company. So it's a big banana. Havas is only 1.5 billion, 2 billion, whatever. So it doesn't have the financial capability on its own to do something with Dentsu. I think it's still a possibility, but I think it's more remote than when we last spoke. I don't get the sense, he's cash rich in Bolloré because he sold off a lot of his African interests, and he has a glob of cash. I think he's got about 5 billion in cash sitting in Bolloré, I think unlevered. I think there are some calls on that cash, but not much. So he's in a very good position. I have heard him say confusion brings opportunity, or disruption brings opportunity. So maybe he's sitting waiting, but he's very astute. He's a smart cookie. He's probably the smartest cookie in our industry.
I mean, I'm sitting with a smart cookie.
No, right, he's much smarter than me.
But when you said that disruptions bring opportunities, right? Given the
he
current...
said that, not me, but
right
now, but I think it's true.
But yeah, if disruption brings opportunity, and given the current market valuations, where digital agencies, independent agencies, they're all a bit under pressure, right? Do you think
not many digital agencies or smaller agencies, independents, are quoted. So it's the listed sector. Publicis has got thumped in the last couple of days. WPP has been eviscerated. Dentsu has fallen sharply. IPG gave up basically. So the sector is under pressure because of this AI cloud. I would describe it as a black cloud.
Let's call it a disruption.
Over. Yeah, that will bring opportunities at some point in time. No, it's like in the outdoor space. Okay, very interestingly, Mubadala, the sovereign wealth fund in the Middle East, just took out Clear Channel at about 12.5 times EBITDA, and in the outdoor space. So here's somebody with the traditional Other outdoor companies selling at 4.5 and 7.5 times EBITDA takes them out at 12.5. So there's a good example where it looked like the sector was not dead as a dodo, but people were against the idea. Somebody coming in and making a call. So somebody could come in and make a call. I think it is unlikely. I think it's unlikely. I'll go on record as saying I think it's unlikely that anybody's going to buy Dentsu International. It's about 4.5 billion of revenue dollars and about 375 million of profit. So you'd have to pay. Let's say you pay 7 or 8 times EBITDA. You'd have to pay 2.5 billion. And I don't know what debt is in there, so you'd have to layer any debt on top of it. It's very uncertain.
Right.
It's in a lot of confusion at the minute. But somebody might have the guts. Apparently, Bain Capital made an offer, but the CEO of Dentsu said no,
Hmm.
either because out of pride or because the valuation wasn't right. Somebody might come for WPP. It's desperately cheap, but the problem with WPP, Cindy Rose has 3 problems. She has a top line problem and a margin problem, and she also has a liquidity problem because she last time we looked, it was 3.7 billion of debt. I mean, what people, again, I mean, apart from the simplicity point, which I think was a ludicrous diversion, the other thing is they've sold a lot of assets, Globant, FGS, Kantar, and their debt is higher than it's ever been. And the debt at 3.7 billion is a billion greater than the market value. So they've got a huge liquidity issue as well. So she has very little room to maneuver.
Right.
She obviously has to win more business. That's one thing, which they started to do. Although the gossip in the trade is that they're discounting heavily to get business. I don't know whether that's true or not, but that's the gossip.
I mean, it's been a black swan practice in the industry for sure.
Well, every agency says the reason they lost. I mean, we've never lost a piece of business because we were worse. So it's always because somebody discounted prices.
Hmm.
So she's got some huge problems, and I think it was very weak to go and hire McKinsey to help her. I mean, that's nothing against McKinsey; they're smart people, but you don't have to be McKinsey to figure out what's going on. The one WPP or the power of one is really where they're all trying to get to.
I wanna bring the conversation to S4 back
Yeah.
and kind of figure out what's the growth pillars for S4 Capital in India today.
Well, we're tiny in India, and we should be much bigger. We're about 250 people here, and we have it as a hub as well as an operation here. But the growth pillars are around content, around data and digital media, and around transformation. I think the work that we're doing on AI in visualization and copywriting, in other words, compressing the time taken and the cost
Right.
of ads is one area. Personalization at scale. I mean, with the EU trade agreement and with the US trade agreement, huge opportunities for the automobile industry, financial services, and personal. Netflix on steroids basically is personalization at scale using first-party data and signals from platforms, hugely important. Media planning and buying. Group M enormously strong in the market. When I was there, certainly a 50% share. I think pretty similar at the minute. So super good business, but it depends to some extent on frictions in the market, and the algorithms are going to take those out. So it has to develop a new model. General efficiency, hugely important. So we can use AI like we've done in outside broadcasting with NVIDIA, AWS, and Adobe to reduce the cost of outside broadcasting. And last but not least, democratizing knowledge.
Where is the strongest margin resilience you're seeing in the Indian market?
Um, well, the agency holding company's dirty little secret is that, and it's not so secret, is that the bulk of the profitability comes from media.
Okay.
Now we run at S4, monks, we manage about $6 billion of media. So in relation to WPP, it's a tenth the size of WPP, um, and we run an open book with the exception of Brazil. In other words, we just charge a fee. We don't take discounts
Hmm.
or media incentives, with the exception of Brazil. In an AI world and an algorithmically driven world and a blockchain world, those frictions are going to go. So the profitability of the traditional holding companies is very much around the media.
Hmm.
And I think over time that gets eroded. And that's, I think, they have to shift their model again. I mean, it's not time based, but it's discount based, volume rebate based.
Hmm.
And that, has been a feature of this market and a feature in a number of other markets. In Japan, it is still, I think, true that nobody knows what Dentsu pays for a TV ad, which is remarkable in this day and age.
What is it?
Well, I don't know what it is, and neither do they. In other words, they never reveal the price that
Okay.
they pay. Dentsu and Hakuhodo, I think, still account for about 85% of all media, TV media, free to air TV media in Japan.
Hmm.
And in fact, when I was at WPP, we used to have to go and buy some space from Dentsu
Okay.
in order to get for some spots.
Is it common in other
No,
regions as well?
no,
No.
no other. I can't think of any other market we do that.
Okay. Let's talk about the
I mean,
tenure
the other
of.
markets where we've got tremendous concentration are South Korea with Chael and LGAD,
Yeah.
and then the third one would be France with Havas and Publicis. There you have, two agencies in each case controlling a very significant portion of the market.
I want to quickly talk about the shrinking tenure of CMOs, Chief
Yeah,
Marketing Officers, and
they're the fool guys or the fool girls for corporate distress.
right. I mean, when you compare that role to a CTO or a CFO, right?
Well, I think CTOs probably rotate for CIOs. The role that doesn't rotate as much as CFOs, and CFOs become CEOs.
Hmm.
It's rare. I mean, very few CMOs become CEOs, and
Right.
I think the reason is, a lot of what we do, uh, certainly the CFO feels, is not measurable.
Hmm.
And so what we have to do, and maybe AI will enable us to do this with even greater efficacy, is to demonstrate the value of what we do. CFOs, just this morning at a breakfast we had with some clients, one said, it's much easier in our firm to get CFOs to sign off on performance-based work, so mid-funnel and lower funnel work, rather than the upper funnel brand building, which is much more fuzzy.
Right. I mean, the shorter tenure, is it directly proportional to how marketing leaders are now going towards safer short-term decisions rather than, going towards
Well,
long-term building,
yes.
brand building?
No, it is. I mean, listed companies report quarterly, so Trump is right. We should get rid of quarterly reporting. Private equity companies, 5-year hold periods. Venture capitalists, one of the first questions they ask is, how do I exit? So everybody's short term. But on top of that, the geopolitical stuff makes you short term because you've got all this, you wake up one morning, it's 100% tariff. You wake up the following morning, it's
Right.
0%, right? I mean, how do you operate in that world? And then the geopolitical stuff. I mean, US, China, Russia, um, Iran. I mean, causes huge, or like COVID, before COVID, just in time manufacturing. Post COVID, diversify your sources of supply, your supply chains. I remember, we had a hacking incident when I was running WPP. It was in 2015 in Ukraine, where the Russians had hacked the payroll system, and there were two payroll systems in Ukraine.
Hmm.
The first was one we didn't use. The other we used with Maersk, the container shipping company, and I think it was Latham and Watkins, the law firm. And we got hit with a hacking attack. And luckily, it happened at about early in the morning, around like sort of 8 o'clock Ukrainian time, and it was the middle of the night in America. So we managed to shut down the connection between the servers. But anyway, IBM was our consultant. And before that hacking attack, they said, you have one system fully integrated. After the hacking attack, it was separate everything so you've got breaks, right? Same thing with COVID. Before that, it was just in time manufacturing, no inventory, supply chain, right?
Right.
And with climate change, I mean, remember one of our clients said to me the biggest problem they had a couple of years ago was flooding in all their factories around the world in the automobile business. And that was the biggest problem, obviously driven to some extent by climate change. So the varying your approach, it's complex. You have to sort of separate these things.
I mean, I have to ask you this. If you were starting out today,
Yeah,
right, with no legacy, no
yeah,
constraints, no history,
yeah.
what kind of company would you build today?
Well,
And would it even look like an agency?
the four things that we focus on, digital only. That's when 900 billion is growing, and that's 75%. It's going to be 80% by 2030 at least. Data driven, for the obvious reason. I mean, it's the engine oil of or the fuel of AI, and then quantum coming down is critically important for that. Faster, better, cheaper, because growth is going to be slower and interest rates are higher and inflation in higher and interest rates are higher, so you have to be efficient and effective. And so faster, better, cheaper and more
So you're
is
saying you're gonna
and
still end up building S4 Capital?
yeah, I mean those four things. I mean, I can't in the agency space, apart from saying, you know,
No, I'm not saying that you
I'm
have to build an
apart
agency.
no, apart from saying I'm not going to bother. It's all too difficult because it has become much more difficult. But I think a more fundamental point is managing people businesses is much more difficult today than it was when I started. This generation is maybe my grandkids will be different,
Hmm.
but I would say this generation is much more difficult to manage. To be fair, this may get me into trouble, but it's a much more entitled generation, and I think it is much more difficult. This whole question about distributed working, about whether 3 days in the office is the right or not. I mean, interestingly, all the academic research, and I've done a fair bit of work with Harvard Business School on this, with their D3 initiative, which is around AI and everything. And virtually every piece of academic work that I've seen argues that distributed working is better from a productivity point of view. I think it was in the early days of COVID. I think subsequently it isn't. And with the Chinese working 996,
Hmm.
um, I think we have to look at that very carefully. I mean, I know Nigel Farage has caused a lot of controversy in the UK by calling for people to go back to the office. I'm not so sure that I would rely on him for it, but in a way, he has a point.
Hmm.
Um, and I think it's much more difficult to deal with now. And maybe it's something geographic. I think the UK has real problems. I think France has real problems. I think Italy and Spain maybe they've managed a little bit better.
What about India?
India's in a superb position, as I said in the session. I mean, it's a growth economy, so it ticked the box in terms of growth, and it's got a technological backbone to it. So
Hmm.
tick the box on technology. So both from a geographic and technological, which are the two forces, that's the game, right? What's happened geographically? So Modi is playing both ends against the middle. I think he gets a deal with Trump and he gets a deal with the EU. What's not to like?
But I have to ask you, I mean, is S4 Capital gonna have more acquisitions going
Well, we,
forward?
we
Because
we want to get ourselves into a stronger position. We're in a slightly stronger financial position now. Um, we've got to get our top line moving, and we've got to get our margins moving better. But we're getting into a better position. So I think we'll see. We'll see how it all shakes out. I mean, some of the valuations on the traditional businesses are super low. I'm very surprised with WPP under 3 billion that nobody's made a move on it.
hmm,
Group M on its own must be worth $10 billion. Must be at least. So it's still got 60 billion billings. We'll find out when the annual report comes out how much they've lost, but I think it must be 55, 60, so, which is huge.
what's that one view you hold about the industry today that most of the people would disagree with?
Ooh. Well, the market is saying the agency business is not a good business. That's what the
Okay.
market's saying. So I probably disagree with that. I think it's still an interesting business. But the market is basically saying the agency business is not fit for purpose or not fit for an AI. I mean, this big black cloud. Now it's affecting others. I mentioned the logistics
Yeah.
industry, which went pear shaped this morning
Right.
because of something. We had it with the legal software industry. Anthropic comes out with a new piece of code, and bang, they go. But this is about short-term algorithmic reaction to pieces of news. Whether it's long-term or not is another question.
Hmm.
At some point in time, somebody is going to say Dentsu International is worth buying, or WPP is worth buying and breaking up.
Right.
Those are the two dead legs at the minute, if you like. Um, IPG was, but Krukowski gave up, and IPG, Omnicom decided to move. So they made that move. I mean, IPG was flat in its back,
Right.
and they made the move. So somebody may come to the same conclusion about WPP. So I think probably the answer to it is an interesting question. What else? Well, I think the marketing is becoming easier, but the general view is the market is becoming more difficult. I think it's becoming more concentrated in the 6 platforms. I said that in the session, and that's what you've got to look at.
Hmm.
It's not becoming more fragmented. This stuff about media becoming more fragmented is nonsense. It's becoming more concentrated.
Right.
Um, so those are different views, but you have to go against the grain. I mean, at times like this, when things look as though they're flat in the bottom. I mean, take the outdoor example I gave you. Flat on its back, Clear Channel heavily indebted, flat on its back, incomes
Right.
from a dollar. Looking at if we rejig the financial structure and goes from to 12 and a half when the others are valued at 4.5 times, that's a huge valuation difference.
Right.
Stroher in Germany is valued at 4.5, and they get taken out at almost three
So you're
times.
saying it's still profitable to be in an
Well,
agency business?
yes, but you have to alter the model.
Right.
It has to be more digital. It has to be more data driven.
And subscription based.
No, you keep saying subscription based. That
That's what Monks is saying. I'm not
no,
saying
no,
it.
no, no, no. What we're saying, no, we've said it would be more outcome based, and if you can get to a subscription model, that's even better,
Hmm.
because it's
Okay, so this is a
it's
journey.
consistent income. Instead of being uh, subject to project pricing,
Hmm.
project you have to repeat all the time. It's not retained work, um, and the other problem we have is we're time based. That's the biggest problem.
Hmm.
We're time based. And I gave you that
Yeah.
example of the ex-WP or the WPP person in Singapore. So we have to get and what's interesting is that marketing departments are prepared to make that change. Procurement departments like Linus's safety blanket, they if you say, you can agree with the marketing department, we're going to change to output pricing
Hmm.
or subscription, whatever it is, and then procurement gets nervous because they might be paying too much, right?
Right.
So you have to sort of work out caps and things in order to get them to move off the pot.
Fast forward 5 years, sir.
Yeah.
What does the global agency landscape look like?
Well, the two holding companies that are in the catbird seat are probably Omnicom, Publicis and Omnicom. WPP is a poor third. Dentsu is a poor fourth. Dentsu's not really an international agency anymore. They've admitted that themselves. They said they can't compete for global mandates. And then Havas, and then there's Stagwell. They're much smaller. So probably a similar market structure. But the big question is, will anybody buy Dentsu's international network? Will anybody break WPP up? Will Havas be one of the prime movers of that, or private equity firm? Um, on the independent side, what do I think? I think there probably is more opportunity for independence. I think you've got two models with clients: the Coca-Cola model, which 75% of their spending goes to WPP,
Right.
and then you've got the GM model, which we're the foundational agency, and you have three upper funnel strategic agencies for the four brands. Um, I think maybe there are three models that we have: the outsource model to us, the embedded model where we put people into clients, and then the in-house model. And we're the subject of the Harvard Business School case study on the in-housing and media at T-Mobile and Sprint. Um, and I think there is more in-housing going on. BBDO lost Home Depot a week or so ago to in-housing. I was speaking to a big tech company which is doing a lot of in-housing we're working with. We don't worry about in-housing because we think there's after-sales service around people
Right.
and churning people and keeping people updated on technology. But not every agency thinks that. Most agencies fight against in-housing because they think they're losing their jobs. Um, so I think probably it'll be more polarized. I think the industry will look like the investment banking industry. So you'll have the equivalent of Goldman and Morgan Stanley and JP Morgan, and then Rothschilds and Evercore and Moelis, the smaller boutique bankers, and
Right.
Ardea partners at the other end. The middle ground will probably be more difficult. So you have the big and the small.
All right. I think I've exhausted my list of questions. It
We probably
was
exhausted the viewers too.
it was an amazing, amazing conversation with
Good.
you. Thank you so much for
Pleasure.
sharing your
No,
perspective
pleasure.
with us,
Pleasure.
and looking forward to speaking to you once again very
Okay,
soon.
Lali or Kumar, whatever you're called.
Thank you, sir. Thank you so much. All right, we can cut now.